I got Kevin Green and Caroline Woods, senior markets correspondents, with me this afternoon as we look to some earnings. Pretty sleepy out there, Caroline. You guys staying awake at the NASDAQ? Are any of those machines working?
The NASDAQ? I'm at the New York Stock Exchange. Come on, Oliver. There's people here. It's not the NASDAQ.
I was at the NASDAQ earlier.
No, but... No, yeah, it's kind of a sleepy day, although you know what is moving ahead of earnings? All the companies that we're going to be talking about, Wynn, Lyft, Rivian, EA, all ended up closing lower today. Twilio actually managed to eke out the slightest gain, just barely above the unchanged line, but interesting because makes you wonder if, investors are kind of scaling back their expectations in terms of if these companies will actually surprise to the upside or not. But I did notice some notable red arrows for the companies that we're going to be talking about, especially Lyft ending up closing down more than 5% ahead of its report.
All right. Yeah, that was kind of harsh, and the response last time around was pretty volatile, so I guess maybe we're trying to buckle up for that. None of these real major market movers. KG, wanted to get your take real quick on our kind of resistance at 52 before we dive into these earnings. Anything to make of that?
No, not at all. I mean, there was a gamma level there, and rightfully so. So, we hit that level and we rejected it and moved down to that 5180 level. And we actually talked about that earlier today on the early show here. And so, right now we just have inside days. It's very dull. We don't have news, light volume, so it doesn't take much to really move the market. And I think the earnings that we're going to get here in after hours will give us some really key insights into specific industries and how they're faring in this market. So I think we will actually get some good nuggets out of these reports here in a little bit.
All right. I think Wynn, too, because our theme this afternoon was sort of unintentionally, but just the way it came together, the bullish China trade from Peter and then the bullish Baidu trade from Tony, that Wynn Resorts is kind of a highlight as we look at China and its comeback story. A decent little beat there on the bottom line of $1.59. Street was looking for $1.27. Seems like revenue, too, was at very least in line, maybe a small beat, as this has been a really, really rough trade for a while, but maybe is clearing up a bit now. Revenues, $1.86 billion operating revenue. Street was looking for about 1.8. Vegas, about 1/3 of that, came in 16 million roughly ahead of estimates. 637 million they reported, rounding there. Macau, solid, 137. The Palace, 200 million. So I mean, Boston too, not bad, 63 million. Caroline, these are pretty solid numbers.
Yeah, and I think that's why they're getting a nice pop. Shares of Wynn are getting a nice pop. I just mentioned the weakness heading into this report and seeing shares move in the opposite direction now because of it. Macau is clearly the growth driver for a company like Wynn, but after LVMH came out earlier this earnings season and talked about some of the weakness that they're experiencing in China, I was curious about what Wynn would have to say, especially about outlook going forward for Macau specifically. But Wynn obviously diversified, as you said, Las Vegas and Boston, also building that beachfront property in the UAE. I do think that I was talking to a CFRA analyst last month about several of these casinos, and he was saying that, yes, for Vegas, there's some headwinds looking forward. Q1 had the Super Bowl. Obviously, Q4 had the F1, so this will include the Super Bowl. But as you look forward, there's not as many big events to look forward to. And specifically for Wynn, he was saying, it's the valuation wasn't very attractive. So something to keep in mind as we look through Wynn's outlook. But looks like an easy beat in terms of that EPS of $1.59, easily topping analyst expectations. And then, as you said, too, sales of $1.86 billion easily topped analyst expectations of around $1.78.
Yeah, this is a pretty clean report. I don't know if we've seen one of these in a while. Occupancy at the Palace, almost 99%, 98.8. Macau, 99.4. Good luck getting a room. Las Vegas, you get a better chance, 88. Maybe that's why I got comped last time at the Wynn. Maybe it's because I blew a bunch of money on the WSOP. KG, what do you think?
Yeah, no, this is a really good report, and actually it does turn around that story or that narrative that we heard from Las Vegas sands, where they did see a little bit of weakness when it came to Macau. And so I think this is actually a really decent report, and their margins, especially when you're looking at the food and beverage space, which is actually a pretty high margin business overall, was a lot better than what we saw on a comparative basis to Las Vegas sands as well. So I think this is actually a pretty decent report. Caroline brought up a really good point, though, when it comes to the events moving forward. What is that going to look like, and how is that going to actually impact traffic? But if they continue to have you, Oliver, at the World Series of Poker, continuing to blow up your chip stack, then I think that they're probably going to be able to
Technically, actually, that was the World Poker Tour. WSOP was a different time where I blew up my stack. All right. Actually, not true last time. Okay, so look, we're kind of turning the corner, it seems. This reflects the overall China trade. I think it's going to be fresh ammunition for the China bulls. I think that folks like Peter and Tony are going to feel pretty good about their positions when you see Wynn Resorts with the generally clean report. It's just been a while since we've hit a few of these in a row. Let's go to Lyft. I think probably is going to be pretty fun. Given last time around they had that typo. I'm assuming that intern no longer works there, but who knows? We're getting a pop already in the aftermarket. And they're starting to trim some of the losses. 8 cents a share on the bottom line. A year ago, that was 50 cents. The gross bookings for the next quarter, which is the second fiscal, 4 billion to 4.1. Street was looking for 4. So that's in line to a little bit of a beat. But the next quarter EBITDA, they're expecting to hit as high as 100 million, where the estimate said 85, and their low bar is 95. So that's a big change. And I could see why the initial reaction was a rally, Caroline, because that's a pretty big deal for Lyft.
Yeah, but you mentioned the 8 cents per share for the bottom line. I'm seeing I have an estimate of 9 cents per share for EPS. So I'm curious if that would be a miss then on. Oh, okay. Yes, and then gross bookings, $3.7 billion. Obviously, that's a key metric for Lyft, and the expectation was for around $3.6 billion. So that was up 21% year over year. That came in better than expected. $1.3 billion in revenue was up 28% year over year. The expectation was for 1.17 billion. So that's a beat on the top line as well. So I think that, this is one that we kept hearing about the consumer being stretched and being more precise with the dollars that they spend, whether it be with DoorDash or McDonald's, and I was curious to see how it's impacting the ride-hailing business. Obviously, we'll hear from Uber tomorrow. Lyft has a much smaller market share than Uber does, about 75% Uber has. But Lyft said it's off to a strong start in 2024. We're executing well and bringing much-needed innovation to the market. That's why our drivers and riders are choosing Lyft more often. So making the case that maybe that they're eating up a little bit more market share, but have a long way to go to catch up to Uber.
Okay. Yeah, it seems like the expectations, were there, to your point. But the market, I think, has kind of prioritized the trajectory at this point. I get that maybe the bar is starting to move a little higher, but I think that they have sort of skirted some of the worst possible outcomes. Maybe not yet, but the fact that they are containing the bleed at this point, Kevin, it starts to look like a legitimate business. Maybe it doesn't need all the other parts, bells and whistles that Uber's got on top of the ride hailing. What do you think? Too early to say or no?
Yeah, I think I would say potentially here. They're turning around the ship, but it's going to take some time here, right? You're still missing on the bottom line. So your margins are still not performing to the street's expectations, even though top line growth and estimates moving forward are suggesting that you are going to make those numbers. So actually Lyft set a pretty high bar for themselves. And if they don't meet those expectations in 3 months, we may have a little bit of a problem. But right now it's being able to sustain, as you talked about, their guidance moving forward, beat all of these expectations. They only missed on the bottom line for this particular quarter, and they talk about the strong growth that they are seeing in bookings. So I think it's a decent report. Let's see if the stock's going to be able to maintain the short pop. We did see some selling activity kind of going into this, and then the conference call is going to be a really good take as well. Sometimes we do get some decent outtakes when it comes to their leadership team, and sometimes they do throw some curveballs that could actually turn the stock around. So that's what I'm actually going to be looking forward to here in the coming minutes.
All right, yeah, like curveballs, good way to put it. Given the last time around. They thought it was funny. Remember, the CEO then did the kind of media circuit afterwards. The CFO and said, "Yeah, that was a mistake. We're moving on." But it was very rare. All right, how about Rivian? Twilio and Rivian, I think, are pretty exciting. Rivian doesn't look like it's quite out yet, so let's look at Twilio. The outlook kind of missed estimates here a little bit. This one has kind of fallen out of favor, though, for a while, but I still watch it because it was such a scion of cloud growth for a long time. But now they're looking at organic revenue of 4 to 5% for the next quarter. I mean, it's just amazing kind of how this has fallen over the last couple of years as a leader of growth. I don't really know what the plan is here for Twilio now that they've basically hit a wall. It wasn't too long ago that they were doing 60% plus. I guess they got everybody to sign up during COVID for their offerings, and maybe that's it, Caroline.
Certainly not 60% plus, but I will say total revenue of $1.05 billion for the quarter was up 4% year over year, and that's actually better than what analysts were expecting. Analysts were looking for a 3% tick higher, so at least it's 1% higher than expected. In terms of EPS, the estimate that I had was for 60 cents. I'm just going through here. I don't actually see the bottom line figure for here, but I do see that it's a top line beat. I think also customer growth is going to be very
adjusted
important.
EPS.
80 cents. Okay, so beat by 20 cents a share. So a beat on both top and bottom line. I think that customer growth is going to be important here because last quarter when they reported, they talked about the decline, kind of the deceleration in customers by about 1,000. So I think that's going to be important. And then in terms of full year outlook, I don't have so they have more than 313,000 active customer accounts. So they did return to growth because before it was 305,000 when they last reported. So not seeing a customer deceleration. In terms of full year outlook, I know that they previously, or analysts were looking for $2.69 on revenue of $4.39 billion. I don't know if you've found that in this report yet, but I haven't quite seen it yet. But that's what we're looking for in terms of full year outlook.
Okay. I'll give you income. I got that. Operating income 585 to 635 million is the year forecast. But I think to the point about accounts is probably as important as anything here, as you point out, returning to growth there, about 13,000 more than they had this time around last year. Revenue, solid in terms of the expectations. KG, do you think this is enough to revive the stock, or is this going to need something more? You're shaking your head. I agree, I feel like.
I'm shaking my head because they're basically backloading the whole year. Unfortunately, Oliver. So that's a pretty heavy weight. They're pretty much saying if for Q2, they're going to see about 1 to 2% growth on top line on a year-over-year basis, looking at organic revenue growth between 4 to 5%. These are all Q2 numbers, to say the least, and the adjusted earnings per share, 64 cents to 68 cents. But when you're looking at their full year guide, they're looking at revenue growth between 5 to 10%. Let's say that comes in at 7%. They're going to have some headwinds here in order to be able to capitalize on that during Q3 and Q4. And then looking for non-GAAP income from operations between 585 to 635 million. And the problem, and the reason why I say that is because it's not the product offerings. They don't have anything new that's really challenging the market. There's a lot of competitors in this space. The only reason that they are actually able to even keep their head above water when you're looking at free cash flow is because of the expense side. They've been cutting pretty much everything across the board. At some point, you have to ask yourself, are they cutting too much where they're going to hinder themselves for growth in the future? And they haven't been able to sell that story. All they're selling right now is expense cuts, but not product offerings and growth opportunities in the future. And once again, they're down. They're going to be under the wire. In the next 9 months, they're going to have to be able to perform and outperform, or they're going to be, for the most part, underwater. And that Q2 guide is not going to take you to the promised land, unfortunately.
Boy, yeah. All right. Harsh. The man speaks harshly, but truly, would be my take. All right. Thanks, guys. Good stuff. Caroline Woods, Kevin Green, appreciate your help.